portfolio manager at Wells Fargo Advisors. All right, Mark, drum roll, please. I just want to cut right to it. Where do you see multi-decade runway?
Well, when you look at semiconductors, that's the sector where I think you want to be. The last time I was on, I spoke to you, Kelly. Thanks for having me back on.
Of course, welcome back.
I think this sector is going to, take over all type of market share from all businesses, all type of, I think everything's going to change. And so when you're looking at...
Wouldn't we just say, because everyone's going to go, how much of this is already priced in? What is NVIDIA up 200% this year? So just put that into context for us. Yeah,
listen, I have clients at S&P 500 companies all over the country. And when I talk to them, they are now just starting to have committee meetings about what they're going to do with AI. And so when you think about that, I think we're in the first inning because we haven't really seen companies implement AI. And we're not going to see that, I think, for the next couple of years.
That said, the stocks always want to anticipate that, right? So NVIDIA goes up 200%, anticipating that now all these meetings are going to happen and there's going to be huge demand. Or not? I mean, do you think it's justified by some of the earnings projections that are feasible for the next couple of years?
If you've used ChatGPT, you know it's justified. I think that when you talk to a lot of the executives at these companies, they really haven't used AI yet. They're hearing about it from their younger counterparts. But I think when these companies really start to see how you can make your company and your employees more efficient by using AI, I think it's going to be a no-brainer for companies to implement this technology.
Maybe a lot of people would say NVIDIA is kind of the obvious or the poster child here, the biggest beneficiary, but are there other chip names? You know, you could say semiconductors and AI, but then you wonder about Intel. So how specific is this call to the sector?
Listen, this is going to be a global phenomenon. So when you're looking at companies in Taiwan or you're looking at companies here at home, you're going to have to use these chips in order to compete in the modern age. And so I think that all of the semiconductors are going to benefit from this new normal.
All of them, even the likes of Intel, or some of the ones that we would say aren't really at the lead or at the vanguard. They're making kind of the, more commodity-like chips, maybe for cars or household devices or that kind of thing.
Absolutely. And you look at Intel specifically, they had billions of dollars that they're just allocating to new plants here at home. So it takes a couple years to build these plants. So I think that Intel is going to be a story probably for the next year or two. But I think, again, SMH and all the semiconductors are where you want to be long term.
I know you also like large cap financials. Now, I don't know if you also see multi-decade runway there, or if this is more a kind of beneficiary of the banking turmoil we've seen and that sort of thing.
Well, Kelly, I'm a value investor. So when you're looking at all the different sectors out there coming out this year, the banks have really underperformed. And if you look at what happened with JP Morgan, Wells Fargo last week, these banks are making money on the top and bottom line. They're knocking it out of the park. Net interest margin at Wells Fargo was $13 billion just as the whole cash. We're not really doing anything. We're holding the cash as a bank. So I think going forward, if rates continue to go up, which I think they will, given what's going on in the economy and the soft landing, I think that you're going to see that the banks really start to shine because of all the different ways they can make money, from wealth management to asset management. Net interest margin, I said before, credit cards, mortgages. If you look at a mortgage in your credit card, they're at record highs over the last 20 years.
But again, we're talking about just kind of the handful of largest firms that are the winners, maybe, while some of the others will continue to struggle and kind of come up with a business model that, maybe includes implicit government backing of all of your deposits.
Listen, there's no doubt about it. The regional banks got hit hard, and I think they will continue to get hit hard as rates start to go up. So you're really going to want to hide out in these large money setter banks, and you're absolutely right. The federal government is going to have a very difficult time making any of those large banks default. And so you've got to kind of have that in the background as well from a safety perspective. So, yeah, large banks because of all the revenue that they can make and because of the fact that you've got the U.S. government as your biggest backer.
Let me circle back. As you said, you stylistically more of a value investor, and most of them don't land in the I want to chase NVIDIA up 200% bucket. So just to come back to, but again, value is a lot of the stocks Buffett and Munger might have bought over the years. Sometimes there were questions about, well, are these value stocks or not? So what are the criteria you're using? Obviously, we're talking about the kind of runway for a couple of decades to say, but what are the kind of the financial criteria you're looking at? Or sometimes does that just not matter when there's like an obvious trend in front of you that you think has value?
Listen, when I'm looking at all the portfolios that I manage for clients, I'm making sure that we're not keeping names that are running up 150, 200% without trimming. So we're doing that all the time. We're constantly rebalancing, and you all at home should be doing the same thing.